I have decided to give up on one of my largest positions that I've been holding for a few years now, which is Canada Goose. So I'm not completely giving up on it, but I'm reducing my position because things don't look as good as I hoped, and my thesis has changed. And this is going to be a brief video in which I explain what has changed and why I am reducing my position. So Canada Goose is a pretty painful subject for me. It has been for a few years now one of my biggest positions, and my average buying price is almost $25, 24.6, something like that. I started buying it somewhere in 2021 when I did a deep research on it, and I continued and I added more when it fell more. So my buying price is $25 around, and I'm down on it currently 60%, which is painful, definitely, especially when it was one of my highest conviction plays. And my thesis at the time was a lot of things, but that it was a high growth company which was growing like 50%, as we can see here, 30% annually in revenues and in profits. And although it doesn't have a track record, which I started to put more emphasis on just lately, but still it is a brand that exists for decades now, and its brand is holding up. So it wasn't just a fashion fad. I thought it was really a brand that withstood the test of time. In terms of its financials, it had a manageable debt, what I thought at the time was a manageable debt, pretty high return on invested capital. It didn't need to raise more capital. It used its own cash flow to grow, and yet it was a very high growth. Their strategy at the time was the transition from wholesale to DTC, direct to consumer, which means that they are reducing their wholesalers, all kind of distributors and stores that sell their product, and they are opening their own stores. So now you will find less Canada Goose at, let's say, Macy's, but you will have to go to a Canada Goose store to buy your Canada Goose parka, which at the time they kind of, I think one of my many mistakes I've made with this one was really buying this story of the DTC strategy, how amazing that will be for the company. I will talk about that more soon, but at the time it seemed very promising, and I kind of bought into the promises of the management also on this. It had high margins, obviously very expensive coats, which are not that expensive to produce, and yet they maintain their only made in Canada, so they kind of maintain their prestige. And the luxury itself also kind of appealed to me. It seemed like, of course, it's a very discretionary product, and a lot of people that buy it are not really that rich. I mean, it's just a kind of middle higher class, but still it seems like even in a recession, those are the kind of population that will still have the funds to buy their winter coats, their status symbol. So luxury has this kind of ambivalent relationship with the macroeconomy, that on the one hand, yes, people are tightening their budgets when the macro is tough, but then again, luxury is something that from the beginning people that have extra money will buy. So it kind of also tends to withstand pretty well tough economic times. So that was it. And a big part of my thesis was also Canada Goose's global expansion, and it was just then around 2021 opening its flagship stores in China. And China is the biggest luxury market in the world, and it was very promising. The opening of the stores seemed like a huge success, with huge lines, with people standing for hours in line to get into the store to get their jacket. So it seemed really promising, and on the promise of Canada Goose expanding into China and tapping into this whole new huge market, only on that alone I thought the company would grow really fast. And also on the management part, the current CEO is the grandson of the founder of Canada Goose, and it has it's really is his baby. He was born into this company, so I believe he should really care about it and wanted to succeed. It's not just some professional CEOs that just comes to do his term and get his stock options and meet his metrics to get the option compensation for it and move on to his next role. Really probably a manager that does really cares about the company and has a huge skin in the game also. And also Bain Capital, a private equity firm, has put a pretty big stake in Canada Goose also, which probably has its own pros and cons, but it seems that they also have a big incentive for the stock price specifically to appreciate. So I kind of thought all those things are going to push the stock forward. And although it seems like one of the mistakes, many mistakes I did with this one, and I already covered most of them in my videos about my investment mistakes, but but it seems like I did buy it pretty much at a PE of 30, 35, which I would never do today again. And it does seem very expensive currently. I think my thinking at the time was that it would probably, if it continues to grow like 20, 30%, it will stay at this valuation of 35%, but I will have the appreciation in the EPS every year. And something in me kind of projected this growth forever. And of course, I covered the mistakes I did in previous videos, but I kind of missed the understanding that there was this boom from COVID, that after that came the bust when people had all the stimulus checks to buy their winter parkas, and understanding also that this is a very cyclical business where in good times it will do very well, but high interest rates and inflation and the tougher macroeconomy do pose some kind of a headwind for it also. And I needed to understand at the time that this PE of 35 will not prevail in every market conditions. But this I already knew for the last year and a half, 2 years. But I still thought that maybe even if Canada Goose's price will not return to my buying price of 25 or even the higher price I thought it would initially go to when I bought it. I thought that from this price, currently it is trading around $10. It has been like $12 for the last few years already. I thought that once its growth will come back, the estimated EPS will shift higher. And also the multiple, if the company will get back to growth of around even 10%, which is much less than it has been before, and the PE will be around $1, which I think is still, I believe, is the earnings power of the company. But now I'm not already sure, but I thought so. So it could get to around a PE of, let's say, 17, 18, and that will bring us a very rough calculation to a price of around 17, 18 with a $1 EPS, which they have already been there in 2019. And since then, they were supposed to grow so much. They opened so many new stores. They launched new collections. They were supposed to expand since then. So I still thought their earnings power should be now more than this $1 in earnings that they had in 2019. But I have waited for the last few months. I already had the creeping feeling that my thesis is not holding up, and I said I'm gonna wait until this winter to see, because one of the headwinds they had was the very warm winters we had in the last 2 years. But this winter is better, a little bit better, still not great, but winters will probably, on average, will be warmer and warmer going on from now forward. But this winter was it was okay-ish, and still they just reported their earnings, and things still don't look good. They even revised their estimates for the worse, and I will still wait with part of my position to see what will be their estimates for next year, which is already 2026 for them. But currently things are not looking good, and everything in my thesis pretty much changed. So in terms of the DTC strategy, it doesn't seem to hold up for now. Maybe it will take another year or two, but at the time it seemed like once they remove their wholesale, they're like, the story is that they're cutting their connections with the lower quality wholesalers, and they're leaving the best quality ones, the ones that align with their brand, with their luxury branding. So it seemed that once they switch from the wholesale to the DTC, maybe it will take a little bit time for the DTC to ramp up, but we'll see this shift where the sales are now coming from the DTC, and the growth is continuing in the DTC, but it does not seem to materialize, and there are probably so many factors impacting it. Again, the market conditions, inflation, and people are tightening their budgets currently, and also China is having, I will talk about China soon, but overall China is having a difficult macroeconomic times also. So maybe the reason the DTC isn't growing is our external, but I think what has changed for me was Nike, because Nike has pretty much failed with their DTC strategy, and it seems like so obvious. Yeah, of course, we're gonna sell our own product, and we have much larger margins and more control of our brand and our indirect connection to our customer, but it's not that easy. And obviously we're all used to go to just a big department store and see all the brands there and decide between themselves. And I think once the story with Nike came out, with Nike, for me it was so obvious that I know for myself that I usually don't buy brand clothing at all, but for my kids I always buy Nike shoes from when they start walking. And the last time I want to buy sneakers for them, we went to the mall and we went to a few departments, so like a sports wear store in the mall, and there was no Nike there. And then I didn't know about the DTC strategy of Nike. I wasn't researching it, and I was looking for Nike. I was asking and they didn't have any, and I was surprised. But then we eventually bought Skechers for my kids for the first time after we bought Nike since my eldest is 6 now. Since he started walking, he was wearing Nike, and that was his first non-Nike shoe. Because I just didn't see them. I wasn't looking for a DTC direct store of Nike. So you just buy what there is there. And I think when I understood that with Nike, that was the wake-up call for me with Canada Goose, also my largest position, that this DTC thing is not a sure thing, and it has its own disadvantages. And if people are used to go to, I don't know, Macy's and look for different coats there and then decide on their Canada Goose, now they don't have that option. They need to know in advance about Canada Goose to actually decide to go to the store, which are usually not always in a big shopping mall where you see it anyway. It's often is on kind of a street, a kind of an avenue of luxury brands. So you actually need to go there on purpose, and it maybe that just doesn't work like it didn't work with Nike. Maybe it also is not working out for Canada Goose. So suddenly I don't feel confidence just following the brand for very closely in the past and more superficially lately, but I don't feel confidence anymore in that this thing is even a good idea. And I know that Nike is now returning to the wholesalers that it cut just a lot that long ago because it's not working for them. So maybe for Canada Goose it's the same story. So this DTC thing with the fashion brands might not be such a great idea. So this is one of the reasons my thesis has changed. And for the other reasons, so I said that they had a low debt. So when I invested back in 2021, it was just before they took on a much higher debt, and now they do have a very big debt of $500 million on earnings of nothing currently almost. It used to be much more when it was 300 million on net income of 100 million. It was much more reasonable than now that their debt is $500 million on earnings of this is GAAP earnings of almost nothing really, but even on the EBITDA and on the cash flow also. And we also see how the cash flow has fallen since then, because 2021 was a boom, just something very anomalic in history. And since then, their cash flow has not only not grown, but fallen since this 2021 when I invested, and I thought it's gonna just grow from now on. So now the debt is relatively very high. And we also see that they have a BBB minus junk credit rating from Standard & Poor. One of the reasons probably being the high debt, but not only, just shows how not very safe this company is currently, or their debt. And also in terms of their return on invested capital that I said, so we also see this decline in return on invested capital because the company took more capital and it has lower return. So the return on invested capital has really fallen also. So pretty much everything has changed and the fundamentals really deteriorated. And in terms of the management that I said, yes, it is the grandson of the CEO, but I don't know, I also had some red flags with the management while I was following the company in recent years. And in my previous video about Canada Goose, one of the first videos I did on this channel, not a lot of people watched it, and it is very long also, but I did talk about how they put some crazy goals for themselves, where it was so detached from reality of what was going on in the market and with the company, and they had this very unrealistic goals, and it was really a red flag for me. It was so obvious they're not gonna reach them, and what were they thinking? It was very weird actually. And the last thing is their expansion, global expansion, specifically in China, but overall, which also doesn't seem to be working. So I don't get it. So it just overall shows the problem with my thesis and the reality that is forming with Canada Canada Goose were they opening more and more stores. They had a very aggressive expansion strategy, which also kind of made it less capital light and more capital intensive, because now they needed all this capital to open their stores, where before they were relying more on wholesalers. And they do open all those stores, kind of slowing down the pace of opening new stores now that their sales are even down, although they're opening more stores. Even inside the DTC sales, the comp sales are down, although the trend is a bit, they're down less than the previous quarter, but they're still down, although they're opening new stores. It's absolutely bad news. So obviously there are the impacts of the macro in China. Mostly in China is experiencing a very hard economic times, but not necessarily that it is the only explanation. Maybe there is some weakness in the brand also and competition, but it's hard to know. But for sure their expansion strategy is not working currently, and there is no light in the end of the tunnel. When will that get better? I mean, I can hold it for 3, 4, 5 to 10 years more, and maybe then it will manage to tap into all the potential that it built with those new stores, but it could be dead money for a long time still, and it is one of the biggest positions currently in my portfolio. So I'm currently reducing it just to be a medium position. So if my thesis does somehow realize, although it does seem less plausible now and less like a sure thing like I thought it was, so I still have that upside and I will still enjoy that, but I think it's just less and less plausible as time goes on. It just seems like it's not gonna happen, and something is really not working out for Canada Goose, and just currently I don't see an upside currently for the next 1, 2, 3 years. Even analysts are currently still estimating for the company to not grow. Of course, it can change and they may surprise, but I want to invest in something which I'm not waiting for a surprise for me to have my gains. I want to know that I do have an upside with the reality as it is currently, which slowly but surely I realize that is not the case with Canada Goose, so I am reducing my position. I will still hold it, but just a smaller position, and of course it is painful. Again, it was one of my highest conviction plays, and it was one of my first investments as a value investor, and I thought it was more of a growth stock, but yeah, it's still the debate whether there is a difference between value and growth, but I thought that it's gonna be a very good hold for the long term, even if it's down for a while. In the long term, it is a very strong brand that is growing and has a good management and has a good product, and right now I don't think that way anymore. Again, it might grow a very long term, but that is too long term for me. Currently, things seem very flat, as this graph seems also. And just to have a quick look at the free cash flow also, I think one of the things that broke me, as the analysts are expecting for free cash flow to go even down in next years. I'm not sure what that based on. I haven't researched, but maybe because they have more capital expenditures now with their stores that they need to maintain, in addition to their production facilities in Canada, and they're expanding their collections, expanding their product offering. So I'm not sure, but it really doesn't look good currently, and definitely that doesn't justify for it to be my biggest position or one of my biggest. Now Baba in the recent days has surpassed it, but it's the second largest position now out of my stocks. So I'm selling it and I'm just reducing it to a smaller position. So that's it. It is a little bit painful, but what can I do? I have to be realistic and look at my portfolio from now forward, and I would be happy to allocate this capital to a stock that does have an upside and looks better and does look like it has more value into it, and also pays a dividend. That is currently what I am focusing on. So just to give a quick life update, I feel like I gave one many videos ago, and since then I haven't said anything. I don't know if anyone is interested, but I shared then that we're thinking to maybe put our roots in Slovenia, but I will share that we have been in my family, we're traveling full time, and we have been in Slovenia, which is the country we decided we want to live in eventually when we decide to settle. Currently we're nomads and we have no permanent home, but eventually we decided to continue nomading for now. We just like this lifestyle very much, and our kids are also happy, so we continue to travel in the Balkans, and we're currently in North Macedonia. Tomorrow is our last day of packing, and the day after tomorrow we're going to Bulgaria, to Bansko. We have been there already. We love it. It's just like a kind of a gathering place for nomads from all over the world. So we're gonna stay there for a while and maybe come back to Slovenia in the summer. We'll see. But for now we're traveling and nomading, and we're probably gonna go to Greece also, Yanis. But we'll see. We're spontaneous with our plans. So that's it for now, and I'll see you in the next one. Bye bye.